digital pour améliorer l'inclusion et dépasser les contraintes de la Covid. Le digital pour améliorer l'inclusion et dépasser les contraintes de la Covid.
Mesdames, Messieurs, bienvenue à nouveau dans notre panel numéro 5, our fifth panel, dedicated to digital to improve inclusion and overcome COVID constraints. Our speakers will be Stephen Simchak, Vice President and Counsel, American Property Casualty Insurance Association. Welcome, Mr. Stephens, Mr. Simchak. James Kent, CEO of Willis Ray Company. Welcome, Mr. Kent. Daniel Polchot, Chief Business Transformation Officer of Allianz Company. And we have two guests from the same company, the same group, Société Générale. We have Philippe Vial, DG de la Marocaine Vie, et Laurent Jourdan, directeur des partenariats du groupe Société Générale. Bienvenue, messieurs. My first question, we have 13 minutes in the panel, and that gives you approximately 8 minutes per group. So my first question will be for Mr. Simchak, and what lessons can be earned from the rapid acceleration of digitalization from the pandemic? What can we say about it?
Surely. Well, thank you very much for having me at this excellent conference. And it's such a pleasure to be with you all today. And I want to thank my dear friends and colleagues at the Moroccan Federation for having me. I hope that we can all be together in person someday very soon. Well, that's a great question. There's a lot of discussion in the United States and around the world about the regulatory relief and regulatory accommodations offered by governments and regulators as a result of the pandemic. And the conversation seems to be focusing now on whether those measures should be continued and made permanent. Many of those temporary measures accelerated digitalization of all the steps in the insurance policy life cycle to a much higher degree than ever before. COVID-19 forced regulators and insurers to change the way that we service customers so that the insurance industry could meet the consumer's needs in a timely and efficient manner, while also protecting the health and safety of employees and customers as the pandemic progressed. In the United States, the pandemic resulted in over 800 orders and bulletins being issued in a very short period of time. That's a lot of change in a very short period of time. In retrospect, many of these changes were possible because of the technological advances and the industry's innovative drive to continually to provide more and better service to its customers. As a guiding principle, I think that if some digitalization of insurance processes was permitted during the pandemic and it improved the customer experience or insurer efficiency and didn't harm prudential or consumer protection outcomes, then I think it should be allowed to become permanent. To the extent that it's not clear whether the measure harmed prudential outcomes or consumer protection, I think that the governmental authorities and insurers should then engage in a discussion about whether or not it should be made permanent or be allowed to lapse. I'd like to take just a moment to speak about 3 areas where we saw digitalization expand as a result of the pandemic. Those 3 would be electronic commerce, regulatory capabilities, and claims processing. Turning to electronic commerce, customers want and need electronic communications and transactions that move at the speed of commerce. Importantly, the pandemic cemented the reality of this need and desire from consumers for more electronic commerce in a more urgent manner. Additionally, I think I should point out that there are positive environmental impacts that flow from the faster electronic interactions, as insurers need to use less paper, need to use less fuel to go to meetings, and generally reduce their impact on the environment from electronic transactions. Specifically, the areas of electronic commerce where we saw an acceleration of digitalization as a result of the pandemic included electronic signatures, electronic delivery of policy languages and notices, and electronic notarization. For the most part, the experience of insurers and consumers during the pandemic in those areas suggests that the temporary measures that allow them should be made permanent in many cases. Turning quickly to the regulatory capabilities and digitalization of regulatory processes in our sector, during the pandemic, many, but not all, US states were willing to be flexible with regard to corporate governance and regulatory filing issues. I'd like to provide 5 examples of temporary regulatory measures that I think regulators should consider making permanent. Several states allowed for in-person classroom licensing requirements to be met by attending a webinar and electronically signing into a class. 2, consumer affairs divisions in most states started sending complaints by email instead of postal mail. 3, permitting financial and market conduct exams to be conducted remotely is another important area of development that came from the pandemic experience. And there I would note that video platforms allow for the same person-to-person communication that examiners were looking for, much like we're having today. 4, the ability to electronically file with US state regulators has been widely permissible for forms and rates, but it is not as common to be permissible for financial, tax, and corporate governance filings. We don't see why electronic signatures could not be permitted for these documents going forward as well. And finally, 5th, biographical affidavits typically require wet signatures and notarization, physical notarization, with a hard copy to be delivered by mail in the US. Going forward, online notarization, electronic signatures, and e-delivery would be helpful.
So what needs to be done from a regulatory perspective to make this to make the insurance more conducive to digitalization?
Yeah, that's a good question.
What is needed to do?
I think that insurers and regulators in the US and in other markets need to step back and look at the measures that were implemented and then have a discussion about what has the effect been. Has this measure, the ones that I just mentioned, has this measure made it easier for insurers to serve customers? And then importantly, have there been any negative implications of these measures? Did consumers find that they were unable to receive documents? Was there some consumer treatment issue? Was there some prudential issue? If the answer to the first question is that it did make insurance processes more efficient, and if those temporary measures did not result in bad outcomes for consumers or prudential outcomes, then I think those measures should be made permanent. And that's going to require some communication between insurers and regulators. But I think that taking the lessons from this pandemic will make the insurance industry stronger and make us better able to serve customers in a way that customers want to be served going forward through digitalization.
Okay. I have a question for Mr. Polshaw. The trend in the new service model and the digitalization, do you think it can continue? And how do we deal with the persons that are not covered with digitalization? How to do with that? We have the tendency to digitalization, but we have the other portion of people that are not digitalized. Question for Mr. Polshaw. But you can answer Mr. Szymczak.
Yes, thanks a lot. Do you hear me?
Yeah.
Okay, very good. So this is actually one of the crucial questions that we are currently dealing with. If you look at the impact of the pandemic and COVID, this is what we've seen is there's really an increase in demand of digital channels, and actually there's a lot happening so that we can, really cater for this demand. And what is also happening is that actually people are getting more used to it, and as they're getting more used to it, and the pandemic is now here for more than a year, I think this is also a permanent change. It will not go away again because people just jumped a little bit above this hurdle that prevented them before. However, if you look at the entire population, there is a significant increase of usage, but there will still be groups which will not use these channels. And there's actually a certain group who does it because they can't. I mean, if you look at if you are a traditional market leader, in Allianz in Germany, we have people in our portfolio that are 90 and above. Yeah? So these are also people that we need to serve. I mean, this is the one group, but there's also a second group, which actually, and I can't really put a percentage to it, is who are increasingly unwilling to use digital channels because they're becoming so ubiquitous, because they fear that the data is not protected and so on. So, and this is probably one of the biggest questions, especially for the industry as such, and also the market leaders, because if you are a niche player, you can just, continue playing your niche game. You just say, I take on the customers who are willing to embark on the digital journey. But that's, of course, not a good, overall strategy from an industry perspective. And it is also not feasible if, as I said, you are a large incumbent serving larger parts of the population. As of now, I don't see the one answer. I mean, there are several answers. So what we are, for example, doing is investing a lot in making, the interactions, of course, easy, investing in UX design, not just the technology, but the usage of the technology. Then secondly, we're also looking on how to actually digitalize analog channels. So we still get a lot of paper because we get a lot of invoices from doctors or from a lot of different providers. So we're using, state-of-the-art technology to translate those into digital formats. So we can apply these processes to that. And then, of course, yes.
Yes, if we take the digitalization from the other side, companies, their employees are in remote work mode, okay?
Yes.
What about the employer brand? How do we deal with that?
This is also the interesting. First of all, we have a lot of positive effects. In Allianz Germany, I think we had up to 90% of people working from home, so 90. So almost everybody was working from home, and it worked extremely well. And that actually, on a short term, increased the loyalty to our brand. All our employee surveys saw a jump during COVID. So people feel actually much more loyal at the moment. So in the short term to our company. The question is, how will it continue? Because at the end, going to the office and meeting your colleagues face to face, was a core element of creating your brand as an employer. And now people are sitting at home. So we are not yet clear how this long-term effort affects us. And again, I think here we will see a mixture. I think there are certain formats that are there to stay. So we will also continue to see, home office rates from, I would say, up to 30 to 40% to be also there for a long-term basis. But then also a return to the office and actually addressing more complex topics. Because what we saw is we are very good in, digitizing our work also when there's more standard processes, not a lot of conflict involved. But we reach a little bit the limits once we, want to deal with new topics, very complex topics where you need some real brainstorming, some real collaboration. There we see after a year that we somehow reach a threshold where you just need people in a room.
Well, I will give the same question to Mr. James Kent. Willis Ray, employer brand, the same question, but I have other questions for you. What is your view on the role of digital to develop the risk transfer industry? And what has changed in the way you can interact with your clients? Mr. Kent.
Okay, thank you. Delighted to be here as well. So I'll follow on Danielle's commentary there in terms of the brand to start with. And I agree with what he says, that some of the changes are permanent, but the need to collaborate is the industry that we work in is all about innovating for our clients. And the human interaction that's needed for that is critical in an office environment. So I think you will find companies being far more flexible around remote working, but human beings are built to interact with each other. And I agree with Daniel's comments that we are going to see colleagues coming back to the office, working on complex matters, but companies being more flexible around lifestyles and the way that we manage office and remote working together. I find it extraordinary that essentially the world shut down a year ago and the insurance and reinsurance industry essentially carried on. I hate to think what it would be like 20 years ago.
How many of your employees are in remote work?
Right now,
in percentage?
Probably 95%, wow. Possibly more. The only offices that we have that are really open at the moment are in Asia, in Australia, in China, in Tokyo, and that is about it. So in Willisbury, we have 2,200 employees. I would think all but about 100 are working remotely right now, and have done for a year. And while I think many colleagues have missed the interaction with ourselves, the ability to travel. You know, this time last year I was with you in Casablanca. It was a memorable trip. I loved being down there. But the fact of the matter is that we have operated without too much change to our service in terms of the delivery of the product. With 95% of our colleagues worked home, and one of my colleagues came up with a great phrase that the world is our desk. So while we're operating on this basis, while we're not able to be together like this, we're able to share a remote platform. So I agree with a lot of Daniel's comments, but it is amazing how resilient our industry has been.
What
just
about
in terms of
risk transfer industry? My question.
So in terms of how technology can help that, is that the question? Yeah. So
yes.
So in terms of how technology can play a role, we see that tech is able to distribute insurance everywhere. So essentially reaching the unreachable, which mirrors some of the comments before me. A good example would be a company that we work with that designs, builds, operates, and innovates insurance solutions that enable financial inclusion and address the protection gap in emerging markets. And they do this by partnering with mobile operators, with banks, with insurance companies, and various financial institutions, delivering simple and affordable insurance cover through the use of a mobile phone. And approximately 50% of the adult population around the world has a mobile phone. So distribution is one point, enhancing the customer experience. Which in a simple way is about changing the way a business interacts with its customers and how those businesses provide those customers with a consistent experience whenever and wherever they need it. I think it's fair to say that society these days is quite a demanding and it has many options. And consequently, those companies that don't interact with its customers in providing that consistent experience, the ability for customers to shop around is there. And then actually, why do people buy insurance? Why do companies buy insurance? It's to pay claims when needed, and technology has played a huge part in the customer experience in terms of insurance payouts.
But there is a matter.
Sorry, please.
There's the issue of interaction with customers. I mean, in the classic way, you have someone who comes to the company, wants to buy insurance, he has explanations. Let's say he's kind of insured to hear what the seller is saying. No, with the digital, maybe you have chats, you have robo chats, but you have no one in face of you.
Yeah.
How does it change?
Well, it's interesting you raised that point, because if you think of the US as a very advanced insurance geography, in fact, an awful lot of homeowners and auto insurance in the US is distributed through agents. I believe the number is 80%, and that is done, as you say, a lot of that is done through face-to-face interaction. So we think of the US as an advanced geography, but in fact, a lot of that is done through the agency distribution that relies face-to-face. But I do think, you know, if the younger generation are comfortable growing up interacting on a platform like this, where you're not in the same room as that person, but you are interacting, you know, via technology. And it's interesting, when we went to lockdown back in March 2020, a lot of phone calls were still done through Skype and through the mobile phone. People were uncomfortable turning on the video and talking as if they were in the same room. And a year on, I think the way the industry has evolved is it is very rare now that I do a phone call without it being on a face-to-face basis.
So you're saying that the new generation is more comfortable with that, but still they do need someone to speak to.
You have to still have that human interaction, I agree. Old men like me are slowly catching up with technology, but my children, they're very comfortable with this type of technology.
Yes. I give the same question to Mr. Vial et Mr. Jourdan. Alors, justement, cette interaction avec les consommateurs, et vous avez beaucoup d'agences qui ont fermé, donc du groupe Société Générale, comment ça se passe? Comment on vend de l'assurance à travers le digital et comment le digital vous a impacté? Un d'entre vous, messieurs.
Philippe, please.
Laurent?
Hello. Bonjour. I'll do it in English. I'm very happy to be with you and with my colleague Philippe. We have an experience in France that's fully digital. It's with Boursorama Bank, which is part of Société Générale. And we've actually realized that customers, even though they are really happy with banking, online banking, and they don't need interactions with people, still they requested for interactions with people. So if you consider online sales, it's only 10% of overall sales, fully digital online, so no interaction. But then if you add telephone, you go to 30, 40, and then you increase. So we don't really oppose digital and telephone or physical. Mm-hmm. It happens that when we combine both, we get more transformation and we get 3 to 5 times more clients going to the end of the subscription path. Mm-hmm. So it's hard to understand why they do that, but still that's what we really measure in France, for instance. Philippe, please, on your experience.
Yes, in Morocco, I think that smartphone application associated with phoning access seems to be the best way and the best mix to reach population without discrimination, because our subject is also about inclusion, and especially for areas not covered by banking networks or brokers, for example. So I think that the customers appreciate to get access to personalized online advices through the telephone, okay? And why not in the future through video application, because YouTube and WhatsApp are the most popular apps here in Morocco, because people, I mean, the rate of a smartphone is very, very high in Morocco, and people are really very convenient with this kind of application.
So you think that a combination of interaction and digitalization can be a good way to start with this digital tendency?
Yes, sure, and it depends. It depends on the type of transaction and type of customers at the same time. You know, we have to be very, very humble about what will happen really. And well, as Steve mentioned just before, it's very important to measure, and the crisis gave us great opportunity to test the customer behavior towards these new relation modes. The regulator gave us the opportunity, okay? And for example, in La Moroccan Vie, we noticed that our customers reacted differently to the opening of urgent email online services during the crisis, depending on the type of customers and the type of transaction as well. For example, patrimonial clients who already have a digital culture, a practice of the product, and a good level of confidence in our institution, La Moroccan-Vie, they use the digital channel as more than 90%. And during the confinement, and after the confinement as well. So we can be almost sure that if the regulator give us the opportunity to continue with this type of transaction, online transaction, we will have a lot of customers who will be very happy to continue. On the other hand,
according to you,
yeah,
I will let you go on, but according to you, what is the best time for human interaction, pre-sale or transformation?
Well, for online is probably
transformation at the end.
Transformation, not transformation, because of the regulatory constraint, and it depends on the countries also. Mm-hmm. So it's very clear that you know, as it was said yesterday, the regulator has really a lot of things to do, as Serap Gonulal said yesterday for the World Bank. The insurance regulator, they have really to work with the association, I mean the insurance association, to ease the capacity of online transactions, which is not really the case currently in Morocco in the text, I would say. Mm-hmm. But after sale is potentially much easier for the customer, because, you know, the sale was done, and just after the confidence is there, and we can probably develop some specific online transaction for after sales.
So the pre-sale time is the best for human interaction
sure.
For confidence.
Yeah.
Okay.
To set up the confidence.
Is the digital, is it a booster for inclusion?
Yes, it does, but that's not enough. Basically, what we've seen is that with the crisis and the pandemics, customers looked for usage-based insurance. So for instance, you are locked down, you don't run your car anymore because you don't go to work with your car anymore. So you want to pay less premium based on usage of your car. And we have increased demand for this, 3 times or 5 times increased demand for this. You just need to send a picture of your mileage, the mileage screen of your car, and then you pay less premium. So that's something they want. I would call it value for money. It's not only being digital, it's paying for what you need in terms of crisis.
This is what
we've seen that for.
So, someone talked about it in the previous roundtable we had, and said consumers, the need for insurance is here today with COVID and with the pandemic. And he said we need less complex insurance to be more inclusive, less complex products, simple, readable products that basic consumer can understand, and more tailored. And that is a way to digitalize also. What is your take on that? I'd like to hear the 5 of you about this. Mr. Kent, please.
So I think that's exactly right. It comes back to the comment I made earlier that we have a relatively demanding and expectant society these days that want instant gratification. And I think the example just given on the user-based insurance is exactly the right thing. You know, people will buy insurance providing they see value in it. And if you are a low user of a car, or you know, for your travel insurance, you know, and you need it tailored to your individual needs, technology is going to help drive the underwriting that supports that. You know, with the technology that not there before, you would underwrite on a portfolio basis, but technology allows you to drill down and create tailored insurance products based on the individual, and that's a very powerful thing.
And simpler.
Absolutely, absolutely simple, and in theory more cost effective as well, because the greater, the less human hands that touch an insurance transaction, the less expense associated with it, the greater speed. So it all comes back to that customer experience, and whenever you are buying something, not insurance, but you go to a shop to buy something, you buy food that you want to consume. You don't buy something general. Okay. And insurance is moving, technology is allowing insurance to move down that same road. Mr. Simjak?
Yeah, I agree with James. I think that's exactly right. I mean, I think when I think back to my own experience of buying insurance for my home here in Washington, D.C., I went online and I started searching for insurers, and I put in condominium insurance, and on Google, 12 different came up, and then there's 12 options. So my first step to make cuts from those 12 to make it a smaller number was I went through and I looked at what's the process here, what's the underwriting process, what's the sales process online. And I was able to cut out, half of them just based on that, because it was a clunky, old-fashioned system that wasn't very customizable. And then price came in, of course. But ultimately, the one I went with was extremely customizable, very simple to understand. I mean, literally, when I was looking at the application process, on the screen of my computer, there was a spectrum, and I could move it back and forth. How much coverage do you want? Do you want $100 worth of coverage, all the way up to, do you want $3 million worth of coverage? And that was so simple. That was for all the different types of coverages. So it was very customizable, very easy to understand, and a fast process as well.
Do you think that we can have like a supermarket of insurance? You go and you have insurance on shelves with prices.
Well, that would be the opposite of digitalization, though, if we had to go in person. But
no, not in person. I mean on the internet. A general store of insurance.
There are certainly companies that have tried that online. Yeah. So that's possible, yeah.
Mr. Polcho?
I think it nails down to a very simple formula. Simplification is the precondition for successful digitalization, because only if you simplify products, you will create a user experience and a process that really is convenient for the customer, takes the customer along. Having said that, there's one thing I wanted to comment on customer behavior, on when they go digital and when not. I'm not sure that the real question is about the process, but actually how emotional a topic or a subject is. If I look, for example, in claims, if you have a simple, glass claim, you want to have it as simple as possible. Maybe just take a photo, send it in, get reimbursed. That's it. If you have an accident, where people got hurt or yourself got hurt, you are completely unclear what does that mean in terms of also liability, personal liability, and so on. You want to talk to people. The same is, when you sell in the sales process, very simple stuff, your second car, no fancy model, just have it online. But if it's more complex, and maybe an old time or whatever, you want to probably talk to people. So I think, having the simplification, but also dealing with, hybrid customer behavior, I would call it hybrid customer behavior, that's going to be the challenge.
Thank you. We have 5 minutes left. And I want to give you a question that is out of the boundaries of this panel, but a question of consumer. We had a question from the audience. Are there risks that are just uninsurable? And I want the answer of each one of you. What risks are just uninsurable? Briefly.
I'm happy to start. The most obvious one now is pandemic risks, as we're seeing from the COVID-19 crisis. The scope of the losses from the pandemic, the geographic dispersion of the losses, and the unclear timeline for the losses as well make pandemic risk uninsurable.
Yeah, I would agree. The only thing I would challenge there, and I think Steve's right, the scale of the pandemic loss is running into potentially trillions of dollars of insured losses. There is not enough capital in our industry to support that. But I do believe the industry has a role to play, and it's that hybrid role between private risk and state or government risk. And the industry has a role to play in helping understand risk, model risk, and hedge risk, because there is trillions of dollars of capital out there looking for home, providing they can understand what the risk is, and providing they believe there is a return on that risk. But I think Steve's right. I would add cyber. Cyber is an event that knows no geographic boundaries. It knows no classes of business boundaries. The whole point about an insurance portfolio is diversification allows you to take large individual losses, but not losses across the entirety of the portfolio. And the thing about pandemic, and the thing that a major global cyber event would do, is it impacts the asset side of the balance sheet as well. So it's that black swan event. And then I would put terrorism, particularly nuclear, of a scale in that as well. The industry cannot afford to take those risks alone.
Mr. Vial or Jourdan?
Cyber is definitely a challenge. I'm not an underwriter for these types of risks, so I'll be humble, but cyber is definitely a challenge, because can you imagine a whole administration or country or being suddenly shut off or disturbed? I'm not sure that can be insurable per se as of now.
Let's go for cyber. Mr. Jourdan.
Yeah, about cyber, yeah, again, I cannot imagine the whole country being blocked. Let's say all the administrations, for instance, maybe some public companies. That would be definitely expensive to insure, I guess.
And Mr. Vial?
I think I have nothing to add.
Pandemic, cyber, terrorism, nuclear.
And cyber, for sure. Even if we have a role to play, I agree. Yeah, if we have a role to play, and we played a role in Morocco concerning health coverage, for example, because it was for individuals, and we took the risk that. And hopefully it was okay to take this kind of risk in Morocco, because thanks to the administration at the moment, the pandemic was really very, very well managed. But we did the job to be, to be with our private customers during this pandemic.
Very expensive. Mr. Pulcho, quickly.
I would say we always have a challenge when we have rapid systemic change, because our models are built on the past, and when we have a systemic change, our models come to a limit. And right now, I'm more concerned about geopolitical developments and how, and if they have there a potential for rapid systemic change where we cannot adjust quickly enough our models.
Thank you, sir. Thank you, gentlemen. And on behalf of the Federation, I extend the invitation to the next year edition. And I thank you for your contribution.
Thanks a lot.
Thank you.
Thank you.
Thank you very much.
Bye-bye.
Bye.
Merci, messieurs, dames. On reprend après la pause.